e-commerce seller in Canada, you, along with countless others, feel completely lost when it comes to sales tax. Do I have to register in all the provinces I'm selling in? Or am I just registering for federal GST? What's even worse is that you're probably charging the wrong tax rate, and it's going to bite you if the CRA decides to audit you. Today, we're going to cut through all the noise to give you the essentials for Canadian sales tax as an e-commerce store owner. Let's get into the video. My name is Sal, and this is Jazz. Both of us and our team, we're Sal Accounting. We are e-commerce focused CPA firm in Toronto, helping folks just like you make taxes easy, make your HST and sales tax very, very simple. Jazz, thank you for being here.
Pleasure's mine.
So let's get right into it. What are the major sales tax systems here in Canada, especially for an e-commerce store?
There's actually three. So one of the main ones is like your GST, and then there's the PST as well, which is a provincial sales tax, and then you have the accumulation of the two, which is the HST that we are used to here in Ontario. Quebec also has a separate one, which is QST, but that's only applicable if you're doing business in Quebec. But predominantly, like here in Ontario, we're only looking at HST. But if you were in BC, you're looking at the combination of GST and PST. So each province that you're working with, you'll have different obligations that you have to adhere to. But we'll get right into that.
So let's tell me a few of the, so for example, which province does HST, which province does PST, and then QST, we obviously know it's Quebec, and which province does just GST? As
I was talking, like Ontario has HST, and that's kind of the go-to here, which is 13%. Somewhere like BC will have a PST as well as GST kind of combination that's built into it. And then you have somewhere like Alberta, which only works on GST. They do not have any provincial tax as well, right? So these are three common areas that a lot of people do business in. Other provinces have their obligations as well, which they have to adhere to, but predominantly this is what we're kind of dealing with for most businesses.
For a couple of the larger provinces, if I just repeat what you said, so Alberta, for example, has GST, so that's just 5%.
Yeah.
Ontario has HST, right? So that's 13%.
Yeah.
You're used to. And then, for example, BC would have your 5%, that's your GST.
Yeah.
Then has the PST, and that is
around 7%.
7%. Yeah, that's for 2025, obviously. It can change if folks are watching this 2026 or future. So that's your major. And then you've got Quebec, which is a whole different ball game, different system, Revenue Quebec, right?
Yes. So similar to like your personal tax filings or even corporate filings when it comes to Quebec. Quebec has a separate sales tax that you would have to apply for. Yeah. So that's a whole separate unit.
Yeah, I think in 2025 it's about 14.97 something percent. So we understand there's different systems now, but imagine I'm sitting here in Ontario. I've obviously got an e-commerce store, so I've got clients or customers all over the place, right? Am I charging based on my 13%, or am I charging based on where they're at, and obviously all of the different tax rates wherever my customers are?
Yeah, that's actually one of the most common misunderstandings. A lot of business think that I'm in Ontario, so I should just be charging HST regardless. That's what should be on my invoice, and that's not just for e-commerce, but for other businesses as well. And I think the misconception here is based on the headquarters of your business. However, the sales tax is actually applicable based on where the services and the goods are made available. So if you're in BC, I actually have to charge you GST PST, right? That's what I have to make a note of, right? So if most of your e-commerce business, even though you're located in Ontario, but most of, let's say, your buyers are in BC, you actually have to adhere to the BC regulations, not Ontario. So it is a bit confusing at times, but I mean, that's what we're here for.
So that's in the case of a good, right? For example, I'm selling shoes, right? I'm selling my shoes from Ontario to all the different places, provinces in Canada, right? What is it in the case of software or sort of any digital service? Like I'm making a website for somebody, I've got a software as a service company, or anything that's more digital, like I'm a consultant, right? Providing consultancy services across the country. What applies? Is it the same rules, or is it still based on where I'm sitting at?
So it is the same rules, even when it comes to digital e-commerce SaaS that we talk about. I'll give you an example. So these days, whenever you're purchasing a software or you're on Facebook and you're doing meta ads or anything like that, a lot of these businesses are now prompted to ask for an address, right? And then that's how they determine, okay, you're located in Alberta, for example, and it helps them determine where you're based off of. Are you actually a registered business? And then based off of where you're located, they will charge you the equivalent, whether it's PST or GST or HST that is applicable to you. So someone like myself, if I'm running Meta ads, for example, or buying a product from Meta, they will actually charge me HST, knowing that they're making that service, the software service, available to me here to utilize. So for this specific reason, yes, it is the same thing as any tangible goods or tangible product. Your software as a service will also be applying the same rules when it comes to sales tax.
So at what point do you start registering and collecting all these sales tax? Is it like the day one that you open shop, or is there a threshold that you have to meet after that? You start to, and I'm talking about each of the different systems, right? HST, PST.
CRA has done a great job in terms of outlining the requirements and in terms of when you need to register. So let's take HST for an example. Being in Ontario, if you exceed your sales exceed $30,000 in a rolling calendar year, you have to register for HST. So I'll give you an example on that. Let's say if you registered your corporation last year in 2024 and you've only made $14,000, and then this year up until June you've made $17,000. You've actually, within that 12-month period, surpassed that 30,000 threshold. Thus, you have to register for HST. Now, CRA also suggests that you are more than welcome to voluntarily register for HST, which can be beneficial if, let's say, we've seen businesses that incorporate and have had large equipment expenses and just the setup cost that they have, which actually has ITC that is built into them because they're paying contractors, buying equipment and things as such. Those ITCs can be claimed even though you may have not even actually opened up shop and started collecting sales. So that ITC, they're able to store that, file a return, and actually get that ITC back to themselves. So now on to the second part of that question. In terms of provincial registrations, there's different thresholds for different registrations. So for example, for the PST, it's $10,000, right? So if you pass that threshold, you have to register for it. So we always recommend that, having an idea where you're about to go do business and where most of your clients are going to lie, understanding the rules and regulations that apply to your business specifically, and be more preemptive rather than reactive to these scenarios. Because if you've passed that threshold and you haven't realized it, and you come back 6 months later and say, oh wow, like my sales are 45,000 now, right? What do I do? In that situation, what tends to happen is CRA will make you liable for the GST, because they say you're responsible for collecting HST or the GST portion of it beyond that point. So it's very crucial to be preemptive when it comes to these things, and knowing when that threshold is coming due and knowing when to register.
No, thank you so much. That was a wealth of information. I just want to summarize it so that I get it and obviously the folks get it. First thing you said was that it's a role for the $30,000 limit. Let's just talk about CRA and federal, right? The $30,000 limit, it applies in a rolling 12 months. It's not your year end.
No.
So for example, if you said 15,000, so if my year end was December, I made $15,000 in December. Now it comes March, I have to register ASAP as soon as I hit that 30,000 in the last 12 months. It doesn't matter that I don't have to wait until the end of the year and see where I'm at until December. Perfect. The next thing you talked about was ITCs, right? And let me just, for everyone, let me just kind of say it in a more generic language. That's the HST or GST that you've paid on your expenses.
Yes.
Right? That's what's called ITCs, input tax credits.
Yes.
If I open up shop today, I don't have any sales, but I know I'm going to have a lot of equipment or whatever that I'm going to be paying out of my pocket for. I want to be able to claim that
HST or GST, I can voluntarily register for sales tax right now, even though I've not met the $30,000 threshold.
Yes.
Perfect. That's an actually very important point, because let's say you buy an equipment for $100,000, you've paid $13,000 sales tax on it. You might not get to that $30,000 threshold limit for another year, let's say, right? But you obviously want to be getting that $13,000 back so that you can spend it on your marketing or whatever. Like, obviously, you'd rather get that the $13,000 that you obviously are due to get. Another important thing that you brought up was that the provincial thresholds are $10,000, not $30,000. So if you're selling to BC, for example, you have to be very careful that as soon as you hit the $10,000 threshold, not $30,000, you have to register for PST in that province.
Yes.
How many days do you have? Let's talk about, again, coming back to making things simple, coming back to federal sales tax. If you hit the $30,000 threshold, how many days do you have to register?
So you have about 30 days to register. So if you were to go open an account, your HST account with CRA today, they'll allow you to backdate it 30 days. And they won't do it beyond that. It's very crucial to be proactive when it comes to registering your CRA account for HST, because once you're beyond that threshold, you're going to be held liable for those HSTs that are over the 30,000. So the moment you know, proactively just register for your HST account right away.
So that's actually a very important thing you said. Let's say I miss the 30-day mark and I have hit $30,000. Let's say I hit $100,000, keeping the math simple. And I didn't collect that 13%. I should have actually charged my customers $113,000. Let's say I didn't do that. I just charged them $100,000. Now you're saying, and obviously CRA is saying, that I am liable for that $13,000. So actually I charge my customers $100,000. I'm actually going to keep only $87,000 of that, because $13,000 I have to remit to the CRA, because I should have collected and I should have registered for their sales tax.
Yes. So when it comes to these scenarios and situations, like CRA would look at it as the onus is on the business owner and the directors that are responsible for this, because these are guidelines and rules that are set by CRA. So if you fail to register in time, the responsibility falls back on yourself, and that's where these kind of things get very problematic for clients specifically. So in those scenarios, we preemptively kind of have meetings with clients and let them know that registering for HST ahead of time is much better than even if you have to file 1 year's worth of nil return. It is not as harmful as not registering on time and then having to pay the penalties and the non-collected HST out of your own pocket.
One thing I want to go back on, we were talking about, let's say somebody bought an equipment or you did one big expense, or you hit the threshold. When you register for this HST, you can backdate it, right? So for example, I went today and I bought an equipment for $100,000, right? Next week I speak to my accountant and he says, oh, you should have registered for HST. Because it's only been less than 30 days, I can go backdate and register from 30 days prior and still be able to claim that $13,000 or whatever it was, the HST that I paid on that purchase, right?
Yeah. So the way it works, again, like I said, is let's say if you've hit the $30,000 threshold today, let's say today is December 31st, you have up until January end to kind of have that HST number be registered on the day of December 31st. The CRA gives you the 30-day window to be able to do so. So let's say if you've hit the 30,000 threshold in November, and now you're coming to realization in January, you're not going to be able to have it be backdated all the way to November. Yeah. Again, the reason why the 30 day is there is that they have given you that timeline that once you've hit it, you have 30 days to register, right? So not necessarily trying to utilize it in a reactive manner, but again, you want to use it as a proactive manner.
No, but being proactive is actually very important, because you can use it as a tax planning tool, right? So even if you've not got any sales, you just want to claim sales tax on a purchase, you can voluntarily register.
Yeah.
Right? I think that's amazing, and that's a very good tax planning tool.
With a lot of A lot of companies, like even e-commerce, actually, there's a lot of times there's setup fees and setup costs that happen, like the website and the back end stuff that is taken time, but essentially these are costs that are being incurred over the year, or however long it takes to set up the e-commerce business. You want to keep in mind that you're able to get back that HST that you're paying on these expenses. So don't wait a year later, get that money back, because that's more cash flow that's being injected in your business that you can further reinvest and kind of cover expenses. Just to kind of give an example, like machinery and things like that, they're not cheap,
Yeah.
right? And again, this also applies to machinery that you may have not paid out of pocket, but the bill of sale is there and you've taken a loan to actually get the machinery. So you may actually have not paid that HST all full and all right now because the loan paid for it, but you're still able to get that cash flow back. So by filing your HST return. So again, one of the key things I will mention on this when we're talking about ITCs is source documentation is very critical. Obviously, this is CRA trying to give money back, and they want to make sure that you have done your part to making sure that the numbers are correct. With the Canadian system, the onus is on the businesses to make sure that they're compliant with the rules and regulations that's put in place. Someone from CRA doesn't come and say, okay, this is your refund or this is what your payable is. We are to calculate it, and we are to make sure that when we're calculating it, we're adhering by the code. So one of the main things that I would recommend is when it comes to HST and the ITCs that we're remitting, those ITCs, we have source documents for them, right? So big equipment, you've got to have a bill of sale, you've got to have the payment in place as well. So that if there is an audit for this ITC, like if we're claiming a huge refund, we do have the source documentation, right? And that's why I would also recommend, and this happens with a lot of businesses, we are often dealing with contractors that do not issue invoices. They will give you a quotation and they say, hey, all this is going to cost you $50,000. On a cash flow perspective, it might look appealing to not, get an invoice or so forth, and you pay cash. However, technically getting that invoice from them and you having to pay that $6,500 as your HST as part of it, it's not hurting you. Yes, you might be upfront paying that $6,500 to the contractor.
You're gonna get it back,
but you're gonna be able to claim it with CRA and be able to get that back. The main thing is when businesses are like, the biggest problem ends up being is when businesses are billing their clients HST, but on their expenses side, they're saying, okay, maybe on a cash flow perspective, I don't want to pay that just yet. But what ends up happening is you're going to have to pay that regardless, because the money that you've collected, you're not going to have anything to offset it against.
Yeah.
Right? The ITCs, you're not going to have them. But now you're in a situation where you're going to have to pay that lump sum anyways, but at the end of the year or whenever your filing date ends up being. So having source documents and getting those from your contractors and making sure it's there is really key to kind of making sure that everything is done right, everything's done properly, and that again, like you're making the most of it.
Yeah, and I always say to clients that HST, you should always treat it as that's the government's money. If you've got a second bank account or a savings account, just put it there, because that's not your money. A lot of times what businesses do is that they forget that this is not my money, and they kind of use it in whatever the expenditures or whatnot. Come the end of the year, they've got no money to pay that HST bill, right? And they're expecting the accountant that to make something up, or kind of just wave a magic wand and kind of make my HST go down by $10,000, right? But yeah, it's really the government's money. So you'd rather, exactly what you're saying, that you've got to pay it to somebody. Either you pay it to CRA at the end of the year, or you pay it to the contractor, and you're going to have an invoice. You'll need that invoice anyway, because you need expenses for your corporate income tax, right? When you're paying the contractor, you might as well get your invoice, do everything through the legit way. That way you have your expense for your corporate tax, and you have your expense for the HST.
Yeah,
the ITCs.
Yeah, and that's really where a lot of the breakdown happens when cash deals are happening and clients are paying $50,000 cash to a contractor, and there's no source documentation. So now again, you hit the nail on the head with there. When you're then claiming that as an expense and there is still no documentation, technically you can't claim it as an expense on your corporate side as well. So not only do you lose out on the $6,500 of ITC which you would have paid, but you also, take 15% of that 50,000, right, is also that tax savings that you would have received had you been able to claim that as an expense.
Yeah, 15, I think 15%, right? Because like Ontario, your corporate tax rate is 12%. Obviously, other provinces is a bit different. You raised a very good point earlier that, for example, I've got what you were saying about if you buy something on a loan or financing it, you can still get the entire HST back. So, for example, you get a company car or you get a van to deliver your products. You can, even if you're financing it, you still get the HST ITC, right? The expense of it.
Yeah.
So you should still register for the HST, get that so you can get the refund from the CRA, and you're not even actually paying for the van yourself right now.
Yeah. So again, this is kind of like we're getting into the realm of when you're buying any equipment or a vehicle, like you said, a lot of these are capital assets. So even though they're not fully paid off yet, it's technically set up as an asset for your business. So the bill of sale would go there, but then the contra account, or I would say the counterpart of it, would be the liability that's there, which is the loan component of it. But loan component actually is basically you paying that money over the period of time. Doesn't necessarily, I would say, restrict you from claiming the full benefit of that asset. HST. And HST right off the bat. So the asset can be depreciated over the lifespan of the asset, and the HST, on the other hand, that portion you are able to claim on that period for the HST filing that you're going to be doing. So yeah, cash flow wise, it definitely helps. So either you're paying less on HST or you might even get a refund depending on your purchases that are happening.
So we've talked about selling to Canada. What if I'm selling to the US? What applies there? Am I charging 13%, or what rate am I charging? Am I charging US sales tax?
So with US, you don't actually charge HST. So the reason being is any portion of the sales that you're selling to the US is still counting towards your overall sales. So let's say if you did $30,000 worth of sales, and you're like, okay, well, I'm just selling to the US. Do I need to register or not? You're still required to register. What it's called the zero rated sales, right? That's what it comes under. So what it implies is that even though you're selling, but you're selling outside of Canada, these zero rated sales also still contribute to that threshold of $30,000. So you're not collecting actual money or HST from clients that you're providing services to in the States. However, there are other implications that do tend to happen. So let's say if you're a business predominantly just based out of Canada, but your entire sales are happening in a specific state or in the US, there are other obligations that do fall into that criteria. Now we get into like a little bit of a cross-border situation. So there's different thresholds with states in the US where if you do pass that threshold of sales there, you have other obligations that you would have to adhere to. So, but bringing it back to just the HST component of it, no, you're not required to collect HST. However, on your invoices that you do send to them, you are to mention zero rated HST, so 0%, right? So that when we're reporting it to CRA, you are able to kind of portion off that these are the sales that were done in the States, which you have actually mentioned as your zero rated.
The great thing with the US is that the sales nexus, or sort of the threshold at which you have to collect sales tax, US sales tax, is so high that I don't think most people need to worry about it. I think it starts at like $1 million per every state. So if you're selling to 5 different states in the United States, it's like you have to meet, I'm obviously giving a simple answer here, but it's probably something around like $1 million in each state that you need to reach before you have to collect sales tax in the US. But I think that's an amazing thing that you said, that you don't have to charge HST to those customers, but you do have to include those sales in that $30,000 threshold, which requires you to start registering for HST.
Yeah.
Right?
Yeah. And then one other thing I want to mention is a lot of times we do have clients that are buying product from the States. So it's like, hey, Jazz, so can I claim this as ITC in some way, shape, or form? Well, no, because there's no HST that you're remitting to your vendor or contractor in the States, which is, you know, charging you that, right? So there is no HST or sort of ITC that you can write off against the collectible. Now, the one thing I would like to mention is the whole amount of whatever you're spending in the States you're able to claim that as expense on your corporate side, but there is no HST implication. Again, sales have to be zero rated, and we do need to keep track of them.
The other exception is also the fact that if that US company that you're buying from, they have a Canadian office, they would likely be charging you sales tax. So you shouldn't just always assume that if I'm buying from the US, I'm not going to be charged sales tax. It is very possible that they have a Canadian business, or they're registered for Canada for sales tax in Canada, and they are actually charging you sales tax. You should still check your sales tax, your invoice.
Yeah, and I think that goes with a lot of software companies. For example, like, you know, we're accountants, we're dealing with QuickBooks, or we're dealing with Facebook. I keep reverting back to Facebook. Is, you know, they and Google actually. So they're predominantly, like I said, like they're US based companies, but they have head offices here in Canada. So that's why you see them, like any invoice from Google or from Facebook, you know, they charge us HST. Now, specifically to you know, Facebook and Google and GoDaddy and things like that, is that there is also another sort of exemption, you can say, where now these companies, if you provide them a business number that is registered and you are registered for a HST number with CRA, they then do not charge you HST on their services.
Saves you the headache, right?
Exactly. But this is fairly again, it's very one of those small details where a lot of people are not aware of it. Whereas CRA would say, hey, you know, you're claiming ITCs on Facebook ads and things like that. Actually, they will say you have to get it zeroed out, because they say provide your HST number to Facebook, upload your information, because now you'll see a lot of these businesses that offer these services in Canada, they require you to provide a business number. And the reason why they're doing that, or the sales tax ID number is why they're prompting it, is so that they don't charge you HST.
So if you don't do that they will charge you, but CRA is gonna get you you're gonna get in a pickle with CRA, because you're supposed to have given them your business number, right? And they should not have charged you.
And this is where I think you know, having the right like support team, and by support team I mean having the right accountant in place and asking the right questions is very critical, and knowing, like, you know, because rules are always changing. Rules are always you know, changing year over year, and if you're not keeping up with these trends and you're not keeping up with the legislations that are changing, you know, you're going to be missing out on these things. So, you know, as an owner, you want to be proactive, and you want to be able to make sure that you have the right person being able to guide you through these. And again, and that's our responsibility, right? To be able to guide our clients and to be able to guide them through these, you know, sort of changing dynamics, especially when it comes to e-commerce, right? And e-commerce is now not only just doing business like as a retail store where you open up a shop and people walk in. Now you're open to the worldwide sort of like, you know, market. So you could have people in Canada, and you could have people in the States. Heck, you could even have people outside of North America. They're ready to kind of sign up for your service or your product. So how are you gonna tackle that? How are you gonna charge your HSTs, and what currency to use? Actually, that's another thing that comes up quite often is, well, my client is in the States. Should I be charging them USD? Right. So these are some of the things you know, that come up quite often, and that's why you need you know, someone that's not just there to do the taxes, but also someone there to be able to advise you on what's best for your business, right? So I think the role of even accountants has kind of transitioned from just, you know, being able to just do your taxes at the year end and being able to do this, to be able to actually be there as, you know, as a support system, so that we can help you grow and kind of address these concerns along the way of your growth process.
Okay, so talking about frequencies of like how frequently you're filing your HST, I understand it's if you're under 1.5 million in sales in a year, in a rolling 12-month period, it's annual, and if it's over that, then it's quarterly, and then obviously it gets to monthly. But let's not get into that, right? But I just want to understand that. So if you've got an annual filing, right? How many months do you have to actually submit your HST return and obviously pay the balance, right? And obviously same question if you're quarterly.
With CRA, like I said, they have guidelines, right? So there are some strict rules where, yes, after 1.5 you have to be a quarterly filer, and beyond 6 million you have to be a monthly filer. Now, it doesn't mean that you can't switch. So if, let's say, you are within the 1.5 and you say, I don't want to wait till the end of the year to be able to do my filing, and you want to elect to switch over to quarterly filing, by all means, that's something that you're more than welcome to do, and CRA is gonna, CRA is not going to say anything in regards to that. Now, when it comes to filing deadlines, and that's where you might want to kind of stay with the annual, right? Depending on the threshold of your business. If you're an annual filer, you have 3 months after your period ends. And again, I'm using the word period because it could change from one person to another. Most people have it aligned with the calendar year, so December 31st being the year end for their HST as well, so that they have up until March 31st to file their HST return. However, again, depending on your year and the period that you have your annual file for your HST, it could be February. And if it's February, then you have up until May to file your return. So it's really crucial to know what is there for your business. It's not a cookie cutter thing for each business that's the deadline. A lot of people have the misconception because of our personal tax returns are all lined up and it's on December 31st is the year end, and everyone gets to go and start filing their personal tax returns, and that's the one deadline for everybody, for most people, and self-employed separate. But in HST, it's really depending on your year and your period. Now, when it comes to quarterly, if you elect to do quarterly, it's when your quarter ends, it's the following month end. So you get roughly 30 days to prepare your HST. And then when it's monthly, it's the same thing. If it's your month end period is January 31st, you have to file it by February 28th. And then there's little exemptions where, if it falls on a holiday or not on business days, it gets rolled over to the thing. But again, the general rule of thumb is, for annual filers, it's 3 months. For quarterly and monthly, it's 1 month after your period has ended.
What you said about registering voluntarily to switch from, let's say, annual to quarterly, that probably helps a lot of e-commerce brands that, for example, sell to US. So, for example, one of our clients was selling gazebos, right? He was selling gazebos to the US. He would buy them in Canada or get them manufactured in Canada. So he is not charging any HST, right? But he's paying a lot of HST. So for folks like that, it's very, very beneficial to switch from annual to quarterly, because you're getting your refund a month after the quarter ends, and you're getting it 4 times in a year, instead of waiting till, let's say, it's December 31st is your year end. You don't have to wait till March 31st to file it and get your refund, right? You can get it today or at the end of every quarter.
And it goes with even the other way around. Even if you have a payable, you wouldn't want to have a $50,000-$60,000 payable at the end of the year, versus where you can split it up into 4 different payments if you are filing it quarterly. So it's really it's not cookie cutter for where one size kind of fits all. Where for each business, we have to look at what their needs and requirements are. For some businesses and some business owners, they're very much proactive, very much on top of their things, and they would like it that their books are cleaned up every quarter. So then they're filing their HST returns, and that they stay up to the order up until the year end, and then their corporate filing becomes a lot easier and seamless to do. Whereas if you're doing an annual return for your HST at the end of the year, then you have your corporate return as well to prepare, and then if you have a payroll on top of that, then you have those 3 that are happening simultaneously, within a certain time span, right? So you got your payroll happening February 28th, and then a month later than that you have your HST filing deadline, as well as your corporate tax remittance deadline. Actually, that's there as well. So it's a whole lot that happens within that crunch. So again, depending on your business, depending on the complexity of it, and I guess also the number of transactions that are happening, you don't want to leave it till the end of the year. You can be proactive. CRA has given you the provision to be able to elect to do quarterly if you choose to.
But in that case, bookkeeping is so important that you're on top of your books, and so that when the deadline comes every quarter, you already have them set, because you're obviously, for an annual filer, you have 3 months to get your books in order. For a quarterly filer, it's 1 month. So you have to stay on top of your books. Anything.
Yeah, for sure. And again, all this kind of works hand in hand, right? Having your books being cleaned up on a quarterly basis allows you to have a better idea in terms of what's happening with your business, rather than doing it at the end of the year. Again, when you're doing it at the end of the year, there's nothing you could do. Everything's done, right? Exactly. Whereas for doing it quarterly, you have the time and ability to plan for the next couple of quarters that are to come. So it could be like, oh, why is I don't know, like why is my ITC so high, right? Are we doing something wrong, or what is really happening, right? Or what can I do to kind of make sure like I'm collecting all the ITCs that I need, or am I missing anything? So if we're doing quarterly, it gives you a little bit more time, quarter over quarter, to analyze these things. Whereas at the end of the year, there's not much on a advisory level or a strategy level that you can do with your business, because you can only strategize then for the next year, not necessarily for the current year.
So if you're using for Shopify or Amazon, I understand that those platforms are doing all the grunt work for you. They're collecting the sales tax. They are basically charging the right sales tax to all the different provinces. And all you have to do is, obviously, once you've collected it, once you've gotten it, you have to kind of remit it to the CRA or the provincial bodies, right? And obviously know that your calculations are correct and do your filing, right?
Yeah.
Right.
So I think one of the other confusion ends up being is where Amazon or Shopify, they are collecting HST. However, the confusion ends up being as well, they took their fees from me, or they took that from me. The assumption is that they're remitting it to CRA on your behalf or to the governing bodies, but they're actually not. It is still your responsibility to make those remittances happen, as well as the filing that kind of goes along with it. So Amazon does not file your taxes for you. They'll collect it and they'll hand it over to you. But they will one of the benefits is that, like you mentioned, is they will break it down by province, by the segments that you need. So it does make it easier to be able to report it. That this is where all my sales are coming from. This is the HST, or this is the PST GST, and things like that. So it makes it a little bit easier, but you still have to do the filing and actually paying CRA for the amounts. And one of the things I want to add on to that is like a place like Shopify, they do have the ability to do it, but a lot of times you have to turn it on. So when you do set up your account, you got to make sure that it is set up correctly, and you do turn on this feature.
Shopify tax.
Yes, exactly. Shopify tax, to make sure that it is doing the grunt work for you. And that's often something that people miss, but it's definitely a great feature that they have that everyone should take advantage of.
Thank you, Jazz. That was really, really helpful. So in summary, you want to make sure that you're on top of your sales number, your Canadian and your US one, your worldwide one, so that when you've hit that threshold, right? For example, with the federal CRA HST registration, you've got 30K as your threshold. Provincial sales tax have their own thresholds, right? You want to make sure you're on top of those. You want to make sure that you know your filing requirements. Is it quarterly? Is it annual? And the deadline, right? And obviously, it goes without saying that you want to be on top of your books, so that when it comes to the deadline, you already have everything set up, and your HST and all your numbers, all your reports. Let's say if you're using QuickBooks, it's all there, and you just want to download it and submit it to CRA. If you need help with stuff like this, obviously we are a cross-border firm, so we do deal with Canadian taxes and US taxes, so definitely reach out to us. And if this video is helpful, hit like, hit subscribe, hit that bell icon. It's going to notify you if more videos are coming, when more videos are coming. We're definitely going to upload more. And thank you for today. Oh, and if you want to know the 5 top mistakes that e-commerce sellers make, I'm going to put a link to the video right here, and you can definitely check it out. And that's it from us. Take care.